What if I told you that Jerome Powell, chairman of the Federal Reserve, is basically the world's most powerful water park manager? Meet Jake at Splash Zone Water Park, staring nervously at the borrower's plunge, a terrifyingly steep slide that costs $50 to ride. But then, something magical happens. The park manager announces they're adjusting the slide angle for optimal guest experience. Suddenly, that scary drop becomes a fun, gentle glide that costs only $10. Welcome to the thrilling world of interest rate policy, where the Federal Reserve controls the economic water park and everyone's trying to decide when to take the plunge. Today, we're diving into interest rate cuts through the splashing world of water slides. Let's make some waves. What are interest rate cuts? The Great Slide Adjustment. Meet our hero Jake at Splash Zone Water Park, home of the legendary Borrower's Plunge. This isn't just any water slide. It's a magical slide that changes steepness based on economic conditions. When Fed Chairman Powell, the park manager, thinks the economy needs a boost, he literally adjusts the slide angle. Watch Jake's transformation as the slide changes. Yesterday, the Borrower's Plunge was a nearly vertical drop that cost $50 and looked absolutely terrifying. Jake took one look and said, "No thanks, I'll keep my money in my pocket." But today, Powell announces a rate cut, and the slide becomes a gentle, fun slope costing only $10. But here's the economic plot twist. This isn't just about Jake's fun day at the water park. Every person represents a different part of the economy. Jake is a small business owner who needs to borrow money to expand. When the slide was steep and expensive, high interest rates, borrowing was scary and costly. Now that it's gentle and cheap, suddenly taking that financial plunge seems like a great idea. Watch the crowd's reaction as Powell adjusts the slide angle. People who were sitting on the sidelines with towels wrapped around them, cash on the sidelines, suddenly start lining up. The slide adjustment doesn't just change the ride, it changes everyone's behavior. The stick figure's rate cut revelation. Let's follow Bob through his day as news of the Great Slide Adjustment spreads through town. Bob wakes up to his phone buzzing with headlines, "Fed cuts rates." But Bob's thinking, so what? I don't even like water slides. Watch Bob's light bulb moment as he realizes this affects his entire life. His mortgage payment could go down because his adjustable rate is tied to the slide steepness. His credit card rates might drop. Even his car loan could get cheaper. Bob's not just a water park customer. He's living in the economic splash zone. By lunch, Bob's at the bank asking about refinancing his house. See Bob's excitement as the banker explains, "It's like the slide got less scary, so we can offer you better deals." Bob's monthly payment drops from $2,000 to $1,600. The slide adjustment just put an extra $400 in Bob's pocket every month. But here's where it gets interesting. Bob doesn't just save that money. With rates low, he decides to finally start that food truck business he's been dreaming about. The business loan slide went from terrifyingly steep to pleasantly manageable. Bob's $400 savings plus easier borrowing equals entrepreneurial. The Water Park Economics Laboratory. Let's explore the different slides at Splash Zone. Each one represents a different part of the economy. Meet the Rodriguez family, visiting on the day of the Great Rate Cut, each experiencing the slide adjustment differently. Mom Rodriguez heads to the Mortgage Mountain slide. Yesterday, it was a 30-degree angle costing $1,800 per ride. Her monthly payment. Today, after Powell's adjustment, it's a gentle 15-degree slope costing $1,400. Watch Mom's relief as she realizes she can finally afford that kitchen renovation, or maybe even a vacation. Dad Rodriguez eyes the business loan blaster. This slide was so steep and expensive that he never dared try starting his landscaping company. But now, the slide looks inviting, the price is reasonable, and Dad's entrepreneurial dreams suddenly seem possible. See Dad's nervous excitement as he climbs the ladder to economic opportunity. Teenager Sofia Rodriguez discovers the credit card cascade, a slide that was charging outrageous fees yesterday, but is now much more reasonable. She can finally pay down her balance without feeling like she's climbing uphill in quicksand. The rate cut just made her debt manageable. The velocity acceleration effect, when everyone zooms at once. Now we witness the real magic of Powell's slide adjustment. As more people start using the gentler, cheaper slides, something incredible happens. The entire water park comes alive. This is what economists call the velocity effect, but we call it the splash zone syndrome. Watch Sarah, who saved money on her mortgage, spending that extra cash at local Larry's lemonade stand. Larry uses that income to hire his nephew Tim. Tim uses his wages to buy a bike from Bike Shop Betty. Betty uses those profits to expand her shop, hiring more workers. See the economic ripple effect splashing through the entire community. Meet investor Irene, who was keeping her money in the safety savings pool, a boring but secure kiddie pool that was actually paying decent returns when rates were high. But now that the Fed cut rates, her safe pool barely pays anything. Watch Irene's dilemma as she's forced to consider riskier slides. Maybe the stock market serpentine or the real estate rapids. But here's the psychology twist. Irene represents millions of savers who suddenly find their safe investments paying peanuts. The rate cut pushes everyone toward riskier slides, creating what economists call reach for yield. Even grandmas are considering the junk bond jacuzzi, the overheating warning system when the park gets too crowded. Here's where our story takes a concerning turn. The splash zone is now packed beyond capacity. Everyone's zooming down easy, cheap slides, spending money, starting businesses, and having a blast. But meet worried Walter, the park safety inspector, who's getting nervous about the crowds. Walter notices troubling signs. The housing slide has lines around the block, with people bidding against each other for slide time. Prices are rising even though the slide got easier. The stock market slides are packed with people who've never invested before, all convinced they're financial geniuses because everything's going up. Watch Walter's growing concern as he sees reckless Rita taking out massive loans to ride every slide in the park. If the slides are this easy, Rita reasons, I should borrow as much as possible and ride them all. Rita represents the dangerous side of easy money, when borrowing becomes so attractive that people overdo it. But here's the economic time bomb. Walter realizes that all this artificial slide easing has created massive crowds and inflated prices throughout the park. The easy slides were supposed to encourage reasonable risk-taking, but they've created a party atmosphere where everyone thinks they're invincible. The great re-steepening, when reality returns. After months of packed water parks and economic euphoria, concerned Carl, the park's financial advisor, delivers sobering news to Manager Powell. The artificial slide easing has worked too well. Prices throughout the park have inflated dramatically. Crowds are out of control, and people are taking dangerous risks. Watch Powell's difficult decision as he announces, we need to adjust the slides back to more challenging angles. This is what economists call raising rates. But at Splash Zone, it means the easy rides are about to get scary again. See the crowd's reaction as the borrower's plunge starts tilting back toward vertical. People who were comfortably zooming down cheap, easy slides suddenly find themselves facing expensive, terrifying drops again. Rita, who borrowed heavily to ride every slide, now faces the nightmare scenario steep slides with payments she can barely afford. Meet cautious Catherine, who never got caught up in the slide mania. She kept her money in boring but safe investments, waiting patiently while everyone else partied. Now, as rates rise, her conservative approach suddenly looks brilliant. The safety savings pool is paying good returns again, and she doesn't have to take scary slides to make money. Conclusion: every slide tells a story. So there you have it. Interest rate cuts explained through the thrilling world of water slides. Whether it's mortgages, business loans, or investment decisions, rate changes affect how steep and expensive everyone's financial slides become. Watch Jake making his final decision, understanding he's not just choosing a water slide, he's timing his entry into an economic cycle that affects everything from his mortgage to his job prospects. Every rate cut creates opportunities and risks in equal measure. Remember, rate cuts aren't free money, they're economic tools with consequences. When the Fed makes borrowing easier and cheaper, it encourages risk-taking and spending, but it can also create bubbles and inflation. When rates rise, it cools down the economy, but makes borrowing harder for everyone. The key takeaways: low rates make borrowing easier, but can lead to overheating. High rates cool the economy, but make growth harder. Timing matters. The best financial decisions consider where we are in the rate cycle. What looks like a gentle slide today might become steep tomorrow. Understanding rate cuts helps you make better financial decisions throughout the economic cycle. Maybe that cheap loan is worth taking while slides are gentle, Or maybe it's better to wait and see if the park gets too crowded. The choice is yours, but now you know how to read the slope. Don't let rate changes catch you going down the wrong slide. Hit that subscribe button for more Stickonomics, where we make Federal Reserve policy as fun as a day at the water park. And remember, in economics, as in water slides, what goes down easy when rates are cut often goes up hard when rates rise. Choose your slides wisely, and always check the angle before you take the plunge.